Good morning and welcome back to the channel. If you are new here, my name is Maurice Jr. What I do is help people stay connected to their dreams and goals by pretty much helping them stay um, motivated, instilling that confidence in them, and pretty much covering anything from financial to success stories and different things of that nature. And today, overall, what I will be doing is I'll cover the basics for investing in Fundrise, why so many investors love the platform, and the investment opportunities associated with it, and why, Nadia and I continue to put money away for Pharaoh for this account. Before I dive into that, two things. One, we have been extremely busy. So, I apologize for the content that I have not put out. If you notice that my introduction to my videos have been hit for monetization. Basically, long story short, someone copyrighted the music associated with my intro, so all of my videos have been tagged for a copyright. Not from the content but from the music associated with it. So if you watching through some of these videos, you would notice that the introduction is different. Still trying to figure it out. I think I may do a contest to see who can develop a new introduction for me. Without further ado, Fundrise. Someone asked me, what is Fundrise? The basics of Fundrise is it's a private real estate investment trust. It may be, you may people hear people say REITs, which is the acronym REIT, and it pretty much has no fees associated with it because, well, let me retract that. It has some fees associated with it. However, it's a private real estate investment trust. If you're not familiar with what a REIT is, it's pretty much that you are investing in a basket of properties, and inside a REIT, you hold a whole bunch of different investments, different types of properties, no matter if it's commercial, no matter if it's single property homes, no matter if it's hotels, different things of that nature. However, today I pretty much want to cover, why we continue to invest in this platform. If you remember anything that I have told you or anything that you have saw in our previous videos, no matter if I was interviewing Terrence Chapman or Kitwan, so many individuals when we talk about building wealth, you pretty much have three avenues. Those three avenues is it's either going to be property, it's either going to be stocks, or it's going to be, some form of businesses. And with that being said, we actually have all three. Speaking of business, we actually started another business, which is the Thomas Investment Group. The Thomas Investment Group, we will be discussing how to purchase mortgage notes. That's another conversation, and that's going to be on our other channel too, the Thomas Investment Group, where we will cover more in-depth details on financial things that we have going on. But specifically here at Fundrise, we started Fundrise, the 1 year review of Fundrise here. We started this September 2019. I guess this would be a good time for me to share my screen. So we started this September of 2019. Hopefully you can see my screen at this point here. I have this glare from my glasses. Let me just take my glasses off. Long story short, here's a 1 year review of our Fundrise account that we started September 2019. We started with a initial investment of $500. That initial $500, let me see. Yeah, that initial $500 gave us I want to say about 20 different properties it gave us about 20 different properties across the country there. So you can see September 2019, we started off with a $500 investment. One thing about the portfolio is that when you start off with the $500 investment, it's pretty much basic. You have no say so or no let's just say you have no say so in determining where your funds will be allocated, different things of that nature, and I'll explain that later on there. But overall, if you was to invest $1,000, that will actually get you to a different tier where you're able to decide where you want to allocate your funds. But for the most part, just having transparency of the the site here, you can see we started off with a $500 investment. October 9th, we received a dividend payback of 80 cents. We actually reinvested it Because again, our goal is to, one, we want to have passive income, and then two is more so of, this is a long-term investment, not for Nadia and I, but for Pharaoh. So this is going to be Pharaoh's account. When he turned 21, we were just going to, give that over to him. And you will see what our goals look like as we continue to invest here. So long story short, October, you can see that we did another $100 investment. On the 15th, we just auto invest $100, regardless of what we have going on. So you can see investment on the 15th of November, December, January 13th, we had a dividend payout of $10.12. We didn't take the money out. We all actually, reinvested it, right back into the account. We also had an auto investment on the 15th. If you notice, I actually had an extra $100 here on January 22nd. What that was anytime I get like a bonus or anything of that nature, I pay myself first. Not only do I pay myself, um, I actually invest in my children, so no matter if I'm putting money into Maurice's 529 plan or Ashton's 529 plan, Pharaoh's portfolio here. My baby girl's almost said her name, but we actually have an investment account of stocks that we put away for her as well. So, we don't have all our, what do they call it? We don't have all our eggs in one basket. But long story short, January 22nd, you can see we had an auto investment. I put an extra $100 in. 15th of February, 15th of March. On the 31st, you can see that I put an extra $100. That's kind of like one around where the time where my mentoring program that I actually have, started making a little bit of money. So I decided to invest in Fundrise, another investment for my son. Then we had a dividend payout for quarter one on April 9th. We automatically reinvested the $12.58. Also, around that time, I actually received like a promotion. I still have my 9 to 5 job, which is being a program mentor at WGU. So, that keeping that job, and basically they came back around and said, hey, Maurice, we want you to be a program mentor too. It's going to come with X amount of dollars. So again, I got another raise. Instead of me going out and celebrating and buying new, different things of that nature, got to invest. You got to invest in your children. Got to invest in your children, because this is not for me, it's for them. One thing I always say, you can't pass your degrees down. I can't pass my computer science degree down. I can't pass my MBA down to them. So I have to create ways where, they're not starting from beginning when it comes to, figuring out what they want to do in life. But I digress. Point is, I got the raise, and I actually raised my contribution, for the portfolio overall. So you can see $140 on April 15th. May 15th for $115. I mean $140. Same thing on June 15th. July, we had a quarter two dividends distributed back to us, which was $9.34. July 10th, the reinvestment went back in, because like I said, we don't take anything out. Then we had an auto investment on July 15th, 140, August 15th, and then September 15th. And then as of this video, you will notice that today is October 7th, and you should have one coming out in about October 15th. But yeah, this is the 1-year review overall. You can see that the total portfolio value right now is $2,215.62. Of the portfolio, 39% of the properties were active. There's 91 properties in his portfolio right now. 39% of them, are, invested in debt, and then the other 61% is, the equity overall in the property. But overall, let's cover the pros and the cons. So the pros is that it's a low minimum fee to actually get started. $500 overall. You don't have to be a accredited investor to actually get going. And then as I showed you, you have quarterly distributions that's returned back to you. One thing I did not mention, or failed to mention, is that when you reach $1,000, you have the option into changing your portfolio plan or your investment style. So like I said, this here is a investment plan that we plan to keep for a long time here. So you can see By 2035, we should at least have close to 75K in here, which is what roughly 15 years from now. So you can see that we'll probably have about 75K just investing in our just own money. That's not including how the market is doing, different things of that nature. So the goal for this account is to continue to grow it for Faro. But overall, when it comes to, I'm pointing at the screen, I meant to show you here. So we have balance investing. All right, so it's three different types. When you reach that $1,000 level, it's three different types pathways that you can actually go. You can go with passive income, where those dividends will actually just be going back to your bank account. Okay, so that $10 and those $12 and different things of that nature, quarterly you will start seeing that money deposited back into your bank account. And then you have what we call the balance investing, is what we actually have here right now for Faro. The third type is an aggressive plan. The aggressive plan is more so individuals who are looking to capitalize on their gains right now. Ever since the platform came into place here, the yearly returns have, been exceptional. So 2014, you have about a 12% annual return, 12.25%. 2015, you had 12.42. 2016, it dropped, to about 8.7. 2017, it was more so around the 11.2% mark. 2018, I actually have not had the data starting there. But overall, you can see that the portfolio is anywhere, anytime you get an investment or a return on your investment, or a high return on your investment, of, anywhere between 8%, or anything over 8%, it's going to be, a good return for you. But the one thing that I really love and why we continue to invest in it is because, what it's just one of those platforms where it's just easy to invest. It's not nothing you have to worry about. And even though you don't get autonomy over how you want or which properties you want to invest in, however, they are always doing in the, things in the best interest of the investment type or the investment pool that you have. So like I said, you got the balance investing, which is for us, for individuals who want the quarterly dividends. However, I just reinvest that money back into the plan overall for them. So as you can see, South LA, this is an equity. The annual return on that is 7.3, up to 9.1%. It's got a B3 rating. If I tell you what, if you have any questions or concerns, just leave your question in the comments, or you can actually just reach out to me on other social media websites, and I can actually address any of those comments. One thing I did not mention is, I talked about the pros. The one thing about that's going to be several cons that comes in mind here is, one, when you do your initial $500 investment, it locks you in for 5 years. Okay, so if it's something where you're looking, short term and versus immediate, so three different pools of goals. You have your short term, your intermediate, and you have your long term goal. So this here is an intermediate goal. For me, it's more so of a long term goal. I don't plan on taking anything out in the next 5 years. So you want to remember, when you make that $500, and anytime you going forward and you need to liquidate, no matter if you buying a house or you buy some, I don't know, you have something come up in life and you need to liquidate your asset here, just remember, it's going to be a 5-year window before you can even take out your funds. So that's one of the cons when it comes to this platform. Another thing is that stood out to me is, because I was new, mind you, I started September 2019. What happened was, we got so many different types of forms associated with our taxes, for our taxes for this. And when I say so many different, meaning we have one for this one, we have several different types of stocks that we own for my baby girl. And those forms began to come in the mail. So at that time, I knew I had to go and hire a CPA. Shout out to our CPA, Dina Thorpes, down there, and she's in one of the Carolinas. But long story short, she was a college friend, different things of that nature. She is a certified PA. So make sure, if you're looking for a tax expert, I really recommend her. But she'll definitely get you right there, no matter if you have a business, no matter if you have, you own a boatload of stocks, or you're just investing in different REITs, similar to Fundrise. She'd get you together. But overall, $500 to get you going. Once you reach that $1,000 level there, you can actually change your investment plan to passive, aggressive, or what we call balance investing. You know, like I said, some of the pros is it's a low minimum fee to get started. Fees, I actually did not cover the fees. So you can see here, one thing I did not cover here. So let's just say, let's go with the all time. So you can see the all time since I started, I only paid 92 cents in advisory fees. Of that, of my properties that, you know, that Farrell have here, of the properties, you got an appreciation of $28.59, and then just the dividends and owning the actual, you know, the so dividends are part of your monthly rents and different things of that nature. That's all factored in, you know, and divvied out to the different investors who actually own different types of portfolios. So that's it. That's pretty much a dividend in this case of for Fundrise. So you have your dividends, appreciation, and your advisory fees. Of that, you know, all time I only pay 92 cents. Typically what I do is the advisory fees can be anywhere from 15 cents a month, I think. But uh, overall, let's just say the more money you put in, the more, you know, it will start to accumulate when it comes to the advisory fees overall. But that's everything related to Fundrise. That's everything that I have. Again, if it's something that you're, you know, looking to get going in, I'll have a link in the description of how you could get going. And like I said, you need a $500 investment to actually get going in this platform. But again, it's something you can put away for your kids as we continue to have those conversations around generational wealth, and then, you know, just setting up assets for them here in the near future. But overall, that is Fundrise. I appreciate, you know, everyone, you know, tuning in here. And like I said, we have several. I have several interviews that I will be putting out. Just have to give me some time here. We have been, you know, packing here at this residence and moving into this community. You know, here in you know, the metro Atlanta metro area. And long story short, you know, we'll start getting some more videos out here. Another thing is we have the Thomas Investment Group. The Thomas Investment Group, that channel and that content is specifically for people who are looking to, I like to say, be the bank, be the bank. So mortgage note investing. If you have any questions or concerns around that, I could send you some content on how to get going in that industry, and to play around in that space in general. So, you know, I'll have more videos of this nature, you know, putting out different content soon. Like I said, I probably will do a review of a 529 plan. 529 plan is pretty much the college plan associated with, you know, Ashton, Maurice, and Farrell has one of those as well when it comes to those. So I'll do a 1 year review. Matter of fact, I don't even think I'm approaching 1 year on that portfolio, but I'll do a review on that soon for people who want to see how, you know, I invest in that while keeping my 9 to 5, while keeping, you know, like I said, my wife and I have started 4 businesses since September 2019, and all of them are doing relatively well. But you know, we'll start to see more of our goals here shortly. And another thing I may discuss as well is a Chapter 13 bankruptcy, the different types of bankruptcy and how to build your credit outside of that as well. I'll just say this: my Chapter 13 bankruptcy will end here after 56 months. I've been, you know, paying into that for 56 months here. So that will end here shortly. And I will do a review on, you know, what went well in my plan, what didn't go well in the plan, you know, what you know, type of things that hinder you from doing when it comes to getting approvals from your trustee and different things of that nature. But the biggest statistic is when you dive into a Chapter 13 bankruptcy, only about 13% of people who enter those, you know, complete the actual term of that. So, you know, I'm grateful that I was able to, you know, get through that bankruptcy. And now what's basically what that's going to allow is for more money to come back into our household, so we can start, you know, divvying that money out to different investment avenues as well. So I'll review that as well. The good, bad, and ugly, man. I don't want to sit here and look perfect, but I digress. Point is, I gave you guys an update for our 1 year review for Fundrise for Farrell. I'll have more content dropping shortly. In the meantime, stay safe, stay healthy, And I look forward to seeing you guys back here soon.